In our video called Paye, how to make it pay for small businesses, we explained why it was a win-win-win strategy to take a salary from your company. In this video, we will consider what level of salary is best to take. To illustrate this, we have used the tax year 2018-2019. The principles involved are likely to be similar in future years. However, as tax rates, allowances and your own circumstances change, then it's important that this issue is addressed year on year. If you are a single director with no other employees, then you are better served to take a salary that's equal to the primary threshold for national insurance, rather than the amount equal to your personal allowances. To illustrate this, let's assume that your company profits before taking a salary would be £54,012. And then you take a salary equal to the primary threshold of £8,424. This will leave a profit before tax of £45,588. On this, the company will pay corporation tax at a rate of 19%, which amounts to £8,662. Once this is deducted from your profit before the tax, it will leave £36,926. That's available for you to pay out as a dividend. Dividend tax will be paid on this at 7.5%. The dividend, less the tax payable, gives the director a net dividend of £34,563. If you add this to the salary of the £8,424, the total net amount available to the director would be £42,987, having suffered tax of £11,025. Let's now compare this with a situation if a salary equal to the personal allowance of £11,850 is taken. As the salary now is above the primary threshold for national insurance purposes, then both employers' and employees' national insurance will be payable. This affects the corporation tax payable and the available dividend that can be made. When adjusting for these, the net amount available to the director is £42,757, which is £230 less than if the salary taken was £8,424. It's thus better to have a salary of only £8,424, that is equal to the primary threshold, if you are the only employee of the company. The situation is changed if you have more than one employee, which makes you eligible to claim the employer's allowance. In this case, it's better to take a salary equal to the personal allowance of £11,850. However, the additional tax saved by doing this is a mere £28. The conclusion that we can come to from this is that if you are the only employee, pay an amount equal to the primary threshold. If you have other employees, pay an amount equal to your personal allowance. The payment of salaries is only part of a tax-efficient strategy to extract profits from your company. Watch out for later videos which will discuss dividends in more detail. If you would like a free, non-commitment meeting to discuss your situation, please give us a call on 01226 245824. We should be very pleased to see you.